Test, test. All right. Hello, everybody. Welcome to this stock market live stream. 40 Finance channel, Geoff Beers here. Hope everybody's doing good. Just going to go through my normal array of tests here to make sure chat's working, volume's working, all those things. It looks like we're in good shape, but somebody do a test comment or a hi or something for me when you can. So let's see what's going on today. We're actually melting down here a little bit in the last couple hours of the market. 1 second. Thanks, Derek. Hold on, I gotta fix this. These screens look like one thing on my computer, and then when you put them on the actual live stream, they change sizes and whatnot. So, all right. So I was talking about a kind of a meltdown here, and I haven't noticed any like major headlines, but you can see today's charts. S&P has dragged down here in the afternoon. Hopefully this is showing up. Yeah, S&P has dragged down in the afternoon. Dow's been down all day. NASDAQ green most of the day, in fact, up as high as 1%, now dragging down. Russell 2000, oil bouncing up. Gold, silver. Silver's been on a little bit of a downward spiral, but here we go. Our good friend, the 10-year bond, has made a lot of moves towards the end of the day, and I say a lot of moves, these are like molecular on a normal time, but if you got to 10:48 a.m., you were at 1.58, and now you're over 6 again. Again, this is molecular, but it seems like, if I had to guess, that's where I would say some of this market weakness is coming in here in the afternoon. Most of the stuff that I'm reading right now, just free, different articles from different websites, different opinions, seems like 2% for that 10-year bond is probably, most people think that that's a common reality, right? That's a no-brainer that we'll get to 2%. I'm not smart enough to project that. I only monitor it for my own basis to figure out, what's going on, ups or downs. And so if we're this crazy on the molecular slide up to 1.6%, can you imagine the roller coaster we'll go through getting to 2%? So that's why I'm somewhat confident. Number one, I'm super confident in stocks. I'm super confident in earnings per share, sales, revenue, you name it. I'm super confident in those things for the reopening. What I'm not confident in is the market, call it valuation metrics, right? So whatever multiple your favorite stocks are trading at, I don't even think it really matters which ones they are. I'll just say PayPal for mine since it's my number one stock. The multiple that PayPal is trading at today will probably go down by the end of the year. And PayPal can still have a phenomenal year. So just make sure that I'm not being mistaken for being a bear. I'm not. I'm just saying that the price people are paying up for stocks today, I have a feeling that that's going to slowly go down as the year goes on. So you might look at just your stocks. If you can only peek into your stocks once or twice a month, you might say like, oh my gosh, PayPal, it's going down. It's underperforming and whatnot. I wonder what's wrong with the company. Nothing, probably nothing. They'll probably have an awesome year. But if anything that I say holds true, the amount of multiple that PayPal trades at, so their earnings per share, might be trading at, 30x times, 40 times, whatever it is. PayPal's actually much higher than that. But then that might come down 10 or 15 points. And so PayPal's earnings per share will still be going up, but people will only be paying 35 times a multiple instead of 50 times. And that, of course, will bring the stock price down despite a great year by PayPal. So just kind of kick things off with that. And then I wanted to just go through some of the stocks that I'm watching. And as always, we will get into questions. I like to just lead off the first 15 minutes with a thought. That one came to mind. And so if you do have questions, feel free to put them in there. And I don't answer them right as they're typed in, but I do try to get to everybody. We'll spend about an hour today, and I'll share my opinion on your questions. It's all opinions. Everybody's an opinion. The guys on TV, the other YouTube channels. I am not, any sort of expert. I just spend a lot of time looking at stocks, so that's why I don't mind sharing my thoughts on things. All right, so first I'm going to look at where my stuff is trending here today. If I can get this lined up on the screen. All right, transition over. These are the stocks I own by market cap. And you can see here a lot of red today, dipping into a lot of red. So I mentioned PayPal, down not quite a percentage point. Visa's made a strong comeback. All the Visa bears have disappeared. They were hanging around quite a bit at 195. I think Visa's in the clear now. And you'll notice with Visa's activity that they are surviving the dips, these interest rates dips. They're surviving them very well. So I think that they have a strong year ahead of them. DraftKings, I think it's just part of the market. DraftKings is down today. It's certainly a high-flying stock that could be affected by interest rate changes. I do like their month through Easter with baseball opening day and, of course, March Madness. I think there's an opportunity for a lot of good news. Etsy down 5%. Same thing with Enphase. You could lump these two in a very similar basket despite different industries. These are overheated stocks, in my opinion. And I say that as an owner. But Enphase in particular, I bought in very high on that one, and I'm paying the price. I'm okay with it because both of these companies I'm in for the long term. So it's not ideal by any stretch of the imagination, but I'm not surprised they're down 5% as we see this little meltdown in the afternoon. Rocket holding about flat. TJX, surprising, minus 2% here, only because if it is an interest rate meltdown, most people are fairly bullish on TJX as a reopening trade. TSM, that one holds up pretty well. Square is one that would definitely go down on any sort of market sell-off. It's in the same club as Enphase. Bitcoin, I think, is down today. TAP doesn't really move in any sort of direction with the market. It's going to be a sort of a consumer packaged goods play, dividend play, so it holds pretty steady. Smile Direct, they came out with a mixed earnings report. I think the future is still bright for Smile Direct, and I'm hanging on to them. I was lucky to get in at 764. So I'm in the green on this one, and I think it has more room to run. BFT, I did a video last week. This will be pay safe, hopefully sometime next week. And I expect that to get going. That reached into the 17s today before the meltdown. Unity Software, this is an overheated stock for sure, but it seems to be holding ground around $100, which is great. Sabre was downgraded today. This is my sort of travel pick, if you will, that I bought on a dip down to $11. Sabre, I think Sabre has more room to run. Somebody came out, I don't know which group it was, and they just said, Sabre was reaching its peak before more airline travel comes off of the runways, right? So they're saying like sort of the preseason peak of Sabre has been met. We'll see. I don't know if I believe that. Amazon, strong today, holding in there against another, some downward activity. We're all waiting for Amazon to turn back around. Palantir, I will likely buy some Palantir shares today, down 5%. If it keeps going in this direction, it could be a small purchase for me. And then Magnite, if you watched my video yesterday, that was one that I did buy yesterday, just small, 25 shares. I hope to get to, depending on the price action of Magnite, I probably want to get to 200 shares or something like that. But I do believe it is a stock that has the potential to go back into the 30s, not because of the company, but just because of where the market is today. So those are stocks that I'm watching very closely. Here are some others that are on my watch list. I'm going to try to sort by market cap so that you guys can see. Interestingly, so that's the 10-year right there. Interestingly, the VIX with this downward action, and you can see we're going down even farther now, minus 0.28%. The VIX is stale as can be. In fact, if you look at the 52-week range down in the 19s, I mean, it's on the low side of the 52-week range. So oftentimes when the VIX is in mid-20s into the 30s, you will see a lot more price action, ups and downs. But it seems pretty flat, so hard to say what's going on. MRAM is a stock I covered yesterday as a potential buy. This is one that I will likely buy. It was on a little bit of a tear yesterday, and I'm waiting for it to get back closer to 5. Under 6, I might start my position, but I will ideally get most of it 5 or below, and then it just sits on the shelf for a while. So look, this is funny. OPRX, which is Optimize RX, they were in my video yesterday on 3 stocks to consider buying at the right price. The right price was not $52, but it ran up 15% today. And as much as I'd like to take credit for it, I don't think that my channel with less than 20,000 subscribers had anything to do with it. But OPRX is a very interesting stock, and I encourage you to read more about them. Switch, I've considered 1558. I think they can go lower, I really do. IGT I covered last week. I think that this is a gaming stock that has a lot of promise. Down 6% today. It probably has more room to go. I'm going to stop there. Riot, Bitcoin, SelectQuote. For everyone who thinks Lemonade is too expensive for whatever reason, take a look at SelectQuote as an alternative and a company that's been in business much longer. There could be a day I buy some SelectQuote. We'll see. All right, so before I dig into the questions here, I went through those stocks real quick, but one of the things that I personally do that maybe you guys would find helpful too is when there's a sell-off, monitor how far each of your stocks go down, right? Because we're going to be getting in conditions right now where it'll be the market that drags the stock down. Like I said, I think that earnings and revenue are going to be very strong. So when you have a consistent event like a market downturn or higher interest rates, if you watch how much your favorite stocks go up or down collectively, you can get a very good feel for which ones are going to sell off the most as time goes on. So just to kind of look back at my list for a second, like I mentioned, like TAP, Coors Light, it does very little to do with any market sell-off at this point. It's a low PE kind of stock. Visa, I mentioned, has been faring pretty well in the dips, but the high flyers, Enphase, Etsy, to name a couple, those stocks typically get hit very hard on any downward pressure. And when you know that, you understand a little bit better on where you might be able to buy if you're interested in adding your position. So in my opinion, there's very few things as important as a watch list. Even if you can't afford to buy right now, watching your stock for a month or two before buying is really important to get a feel for the flow of how does this stock react in good times and bad. And that's probably your best indicator of when a good time is to buy. So hopefully that helps as some quick tips to get things going. I am going to check out some of our questions here. Looks like we just have maybe one or two. Let's go Humble. Nice. I've seen mixed reviews on Humble. It's not a stock that I own, but let's just take a look at it for fun. This is a SPAC, right? It's a SPAC on, if I remember correctly, it is some sort of payment, kind of PayPal competitor. And yeah, so it looks like the Gentleman Airborne Jets, if you were in prior to, call it Jan 15 at 81 cents and even below, now you're at 280. Humble Pay, Digital Money Network provides digital pairing experiences for consumers and merchants worldwide. Yeah, I've read the investor deck for Humble. And, you know, like all these other digital payment options that are coming out, you know, I think for a lot of them, you know, I happen to be big on BFT and PaySafe because they're going to integrate with DraftKings. That's my primary thing there. But all of these, you know, Stripe's coming out. They think Stripe is coming out. They all have a chance. It's a very profitable industry. And if you're confused on like, hey, you know, who should I, out of all these digital processors and payments and whatnot, one thing that would be super helpful for you to do and look into is understanding where Visa and MasterCard sit in the whole game, as well as Fiserv. If you want to get closer to the top of the ladder, Visa in particular has a lot of technology that even though, let's just say PayPal, even though they're getting the money and the transaction, they're actually using some of Visa's technology to connect back. So if that's just another way to play the game for the long term. Visa is never going to jump 50% in a year, like Humble potentially could simply because of its stock price. So you trade, right? You don't have as many downs and ups, but you're consistently moving up the whatever ladder is the word I was trying to say. But Visa, look at Visa and the term payment rails. That's a sort of industry term for the technology that takes the money from this place to that place and reconciles and all those things. Visa is a very solid stock for the future, in my opinion. All right, so that was Humble. Your opinion on ASRT for Fadi. Hopefully I said that right. ASRT. This, well, it's another penny stock. Let's see what we got here. This one pre-pandemic, or not pre-pandemic, high of last year in June at $1.08. And let me see what they do real quick. Specialty pharmaceutical. So I'm not super good with pharmaceuticals because if you've never read a pharmaceutical release or, you know, some of these interesting things that come out, it's hard to tell which way some of these are going. This to me though, just to answer your, you know, my opinion on this is it's a home run or it's a pop out. That's it. It's zero or it's something. And if you're trading it daily, then you know that you're going to have probably more opportunity to catch a good day, catch a news day or not. But generally speaking, biotech in general, for me, is not a place that I play. If I was going to get into a pharmaceutical, it would be the OPRX play that I mentioned before the run-up yesterday. So good luck with ASRT. You're playing the news. You're playing the press release. You're playing the FDC and all those things. So that's the game. Can you get the information before the next person? And I don't have the experience with trading penny stocks daily to say. Lucky Kanth. Why did you choose DraftKings over Penn? That, for me, I can see the benefits of both. But for me, there's a couple reasons. Number one, I've been a DraftKings customer for a long time. 5, 7, 8 years, I don't even know. So I'm very familiar with the platform. Number two, DraftKings does not have physical real estate casinos like Penn does. Now, Barstool does not have physical casinos, and I think like the merger with Barstool, was a good one because they're focusing away from the real estate into mobile gaming. So I could see how it works. But I do worry about Penn's real estate profile dragging the rest of the wins down from the mobile side. DraftKings also has the added advantage of no debt. So when they came to market like they did as a SPAC, they really are a blank check company. So if you go look through their fundamentals, they really are spending first, spending with no reservation whatsoever on marketing and partnerships, and they do not have debt currently for that, for those transactions because of the way that they came live. So in my opinion, I think DraftKings is better set up for the long run. However, it's an opinion. I think Dave Portnoy is awesome and hilarious, and I follow him, and I love to get his reads. The argument is that Barstool and Portnoy provide free marketing and a free user base, so to speak. And I always, when I get in these conversations with people I talk to stocks about, I come back and say, you know what? DraftKings already has a user group of daily fantasy players in every legal state. So I agree that Barstool is a big win to come over, but DraftKings isn't working from zero either. I'm daily fantasy. I'm in Ohio. You cannot play state gambling in our state, but I can drive to Indiana because I'm in Cincinnati. Indiana is very close, about 45 miles away, or 45 minutes away. And for the Super Bowl, I drove across straight lines with my little app and the GPS or whatever the hell it does, and I made my Super Bowl bet. So that's my preference on DraftKings. I'm going to get a drink here. Derek says, you did a video on apps about a year ago. Does that tie into MGNI Pub M? Yeah, the apps, and I almost reposted apps the other day. I didn't buy it at that time. And that's the thing, to do some of the videos that I do, I can't buy everything, right? I'm not rich. I don't have, I'm very comfortable with my portfolio and whatnot. So if you guys love stock picks and stock analysis, which I absolutely do too. However, it's a limiting factor when you're trying to make videos. You can't buy them all. But yeah, apps. This is the one. They're a app marketing engine, if I remember correctly. Software that enables operators and OEMs to control, manage, and monetize devices. Programmatic. Yeah, they have some programmatic, but I haven't read this in a while. It's a little different than Magnite. So the Magnite one is going to be a bigger play than Digital Turbine if it fires, if it works, right? So my memory understanding of of this company. I'm going to go look at their website for us here real quick. Okay. This is what I remember them for. Makes it easier than ever for people to discover new apps and content, for operators and OEMs to boost their revenue. So when I was first high on this one last year, or I saw the potential, it was mostly because of the discovery end. App marketing is difficult. You could have there's zillions of awesome games out there that nobody's ever played. And it's just because it takes a while to get that sort of organic reach. Digital Turbine does help with that. It looks like they also have done some work to allow content to be monetized. I didn't even think of them in that space, to be honest with you. So that's an added bonus, but it's not going to be the same as MGNI. I guess it could be, but Magnite is going to be working probably with much bigger players. So where Turbine is going to be on, think of it as like independent gamers. It doesn't mean that they can't make a lot of money, but they're just going to have like 1 or 2 games. It's just going to be like a small shop in Cincinnati, Ohio. Hopefully they get lucky on 1 game or 2 games. And that's who I picture working with Digital Turbine. Whereas with Magnite, an app inventory for them, you're probably in that sort of like Angry Birds world, or whatever's hot nowadays, right? Big time corporate entity. You're going to take all of their, you're going to have a pretty significant amount of real estate to put into the trading platforms. So that would be the difference. But just to be fair, your call out, Derek, on the apps trade about monetization, that's not even what I thought of them for. So maybe it's a growing part of their world. Okay, Zach Lane, have you done any research on Vuzi? I saw them the other day, smart glasses. Can I tell you that it's not a trade for me, only because I don't believe in the product, and I haven't seen their product. But now that Oculus and stuff has been out for a while, and I just haven't seen people gravitate yet. I think it's ahead of its time. So maybe if you like Vuzi, which is actually Vuzix Corporation, off the top of my head, I say go for it if you know something that the street probably doesn't, right? So if you, and I see it's jumped up quite a bit, you can see the volatility on this one. So high of 22, then we had the market meltdown down to 13. Now you're coming back up to 22, down to 19. No matter what you do, look for a dip like this, certainly. But I don't know anything about this particular company. And the bigger question is going to be, do you think these augmented reality glasses are for real? Can you envision X amount of units sold, right? Because where I sit today on Oculus and the similar, I believe that people are using them and having fun with them. I believe that segment is mostly under 21. And so when it's thrown into the Facebook stock, I'm all good with it. Because that's just like Facebook makes $1 million or billions of dollars, and they can have these things going on the side, and we don't have to sweat it out for 5 years. But when you're going to buy a company just for that, I don't believe in the product enough to put my money over for it. So that's just my take. Marketing getting crushed. Yeah, JP is right. A little bit of stability, NASDAQ to minus 0.12. I don't mind, as I led off with, that things are going to get pulled back here a little bit. I think that this is a really good time to manage your cost basis and get into a couple things that you weren't too sure that you liked them or not. and jump in with a small buy and potentially manage down from there. There's no way, I could be wrong, there's just no way we don't do this every month for the rest of the year. The ups and downs. You're going to have good and bad days, and that's such a cop-out answer, I understand. But last year we did not have very many dips at all. And so I think this year we make up with a lot of mini ones. JP says, Jerome Powell speaking tomorrow, probably going to make it worse. Yeah. Wouldn't surprise me. The other thing that happens tomorrow, if I'm correct, and I don't understand this world as much, but I believe that on Wednesdays there's a bond sale from the government every Wednesday. So that could be dead wrong. But when that happens, the bond prices tend to get updated on the week's demand. So Wednesday's always like a bond day, typically. I'm the worst person to listen to about bond information, but I'm just throwing that out there. You got Jerome Powell speaking, and then you have the bond sale. If those two things happen at once and neither one of them are good, then yeah, you could see a meltdown. On the same token, if we walk out of the bond sale and the 10-year goes back down to 15.7, 1.57, then Jerome Powell is super excited, then everything goes up. So it's just like you can feel the instability here. You can feel how little it's going to take of a wind to not knock the house down and to like crash and we all lose $1 bazillion. Talking about prices. You can feel the instability in prices right now, in my opinion. And that can be a good thing if you want to buy stuff. But you have to wait and you have to pick your spots. And if you did that last year, you missed out on a ton of money. And that certainly pertains to me across a few stock plays. But not this year. I don't think you have to wait as long this year to see some discounts pop up, and just be ready to go. I would not buy on a green day. I would not buy on a green day in 2021 for any reason. I would only buy on negative days for the market and a negative day for my stock. Don't worry, your stock will have one. Today, my whole board was red, right? Those are the days you should buy. JP, thoughts on Academy Sports? Maybe. I don't know it. ASO. Is it a retailer? I assume it's a retailer. We'll put it on the board. How new is it? Okay, IPO $12.99 on September 28th. Let me just read real quick. Academy Sports operates sporting goods and outdoor rec products retailer. Company sells a wide range of sporting. Okay, so very super duper similar to Dick's. Dick's is having incredible success. Can this company do the same thing? We're not going to have very many statistics to find out. It's got a good PE. Don't forget retail PEs are much lower. So this 10, while it would show up as super value, it's probably, it could be undervalued, but retail PEs are weaker than technology, just as an example. Some of this stuff looks pretty solid. In the last 12 months, they had $5 billion in revenue, which was $23.81 a share. They had gross profit, $1.43 billion, EBITDA of $500,000. So at least it's profitable, which is more than a lot of these IPOs or SPACs could say. Debt, $2.68 billion in debt versus call it $900 million in cash. That's a little out of the normal, what's the word I'm looking for, ratio that I'd be looking for. However, retail requires a ton of upfront financing for goods and stores. So this may not be as bad as it looks. Normally, just on my eyeball, I like to see debt the same or lower than cash and lower than revenue, just eyeballing it. Now you're doing you have more revenue on trailing 12 months than you have debt, which is great. So that's strong. So maybe it's a zero worry. Short percentage of float. Man, they're coming at this one. 47% short percentage of float. I'm not sure why that is. This 13% of outstanding shares, you normally want to go with float, in my opinion, because that's sort of the ones that are on the market. But yeah, just watch that short percentage or embrace the short percentage. And if you believe in the company, kind of like I've done with Rocket and Smile Direct, embrace the short percentage and wait for the shorts to give up. So ASO, man, not so bad. I was not sure what I was going to see there when it was an IPO, but I think a profitable company, there's something there, and I think sports and outdoor rec are going to be just fine for the future. Retail's a tough place to play, but get to know their stores a little bit. Hopefully you can walk into one somewhere and check out their online experience. Order the next time you need something. I've got kids who play baseball and soccer. Next time you need something stupid, like a pack of baseballs, order it from there and see what it's like, just for the heck of it. Might be a way to go about it. Andrew is asking about MX. Magnachip semiconductor. Off the top of my head, I'll say anything semiconductor I am very bullish on with the chip shortage. It looks like this one has had a good year as well. Very surprisingly low EPS here. Our PE ratio 3, 754 EPS is strong. Where are they at? They are in Luxembourg. Together with its subsidies, mixed signal, semiconductor platform solutions, Internet of Things, Foundry Services Group, and Standard Products Group. Foundry Services Group provides analog and mixed signal foundry services for fabless and integrated device manufacturer companies. So this is interesting. I will read this one. I don't have a direct comment on it, but let's take a look. If they're serving the foundries, as that seems to insinuate, you might have something here that I would be interested in anyway. How long they've been around? They've been around for a while. And they're kind of still on pace with what they've been doing. PEG ratio under 1, price to sales at 2. I mean, there's some good stuff here. Let's take a look. This is probably why they're not very big. $500 million in revenue. Not that that's terrible, but it's just there's so many big players in chips. 500 million. You've got 279 million in cash. Debt load under 90 million, so that looks pretty strong. Short percentage of float, 4.62. I like this, Andrew. I don't understand the company, so that when I do this, this is just my eyeball approach. But there's a lot of reasons to dig more into this. Let me type it into TipRanks for you, so you can see what the pros are saying, so to speak. So you got a guy at Needham saying 30, 12 days ago. 21 days ago, Citigroup said hold, but that looks like the only person. 1 month ago, you got 30 and 25. So it may not be a plus 50% stock necessarily, but it looks like it has room to go up still. So, and I'll be adding it to my sort of Post-it note watch list. I want to learn more about it because if they're serving the foundries and we know that there's not enough foundries in the world, I don't know what that business, exactly how that works, but I'd like to learn more about it. So thanks for sharing. All right. Bio, Fiverr. I do like Fiverr conceptually. Let's see where they're at today. I do not own it. I don't know that it's owned in any of my ETFs either. Check in. So NASDAQ, by the way, is back to flat. So a little bit of a bounce back. So Fiverr up big on the year. Minus $2 EPS. They've hit revenue, although they only actually met revenue or met earnings here. This looks pretty good. You've got revenue spiking and earnings getting better, which if you watched a recent video of mine, we had a few that it was not going that way, and it's just not something I can get into. All right, check in on the stats. Let's see how they're doing. You got some things here. Negative profit margin isn't obviously optimal. Revenue, 1.89.5 million, so not a ton of revenue. And EBITDA was negative. So they're working through some stuff. Cash of 487 million versus 371 in debt. Shares short 5%. Let's see what the analysts are saying. Feels like it might be high. Yeah, I'd probably put this in the high. So if they hit 29 cents last year, supposedly, although that does not show up on the main Yahoo page. This year, they'll barely add 10 cents to it, so not a lot of change there. And that's going to put, you got a skyrocket PE in that scenario. Now, next year, at $1.19, brings you down to, I think under $200 PE. So if you're long-term, there could be something here. The growth rates for revenue look really strong, plus 50% this year, and plus 33% next year. So you got that going for you. I would say in today's fragile market, 235, you will probably find it at a price less than that. Let's see what the month-long activity is. 196. I don't think that, I think the price is too high. Not by a ton, but I would definitely aim, this would have been nice on March 8th if you're under 200. Still doesn't help you a ton, but you're still looking at 2 to 3 years. 2 to 3 years to get your money back on Fiverr at its current price, assuming that you believe interest rates will be continuing to go up slowly over time, which will bring valuations down. That would affect a stock like Fiverr significantly, to be honest with you. Okay, JP says DKNG has daily for, yes. And I know that this questions are behind me talking, but Penn, Barstool, Portnoy, definitely bringing in users without question. DKNG, though, they had their daily fantasy base that they've been building for multiple years, the one that I'm actually in. Can you give thoughts on P disparity between AMD, NVIDIA, and TSM? That's a good question. Let's see, how do I want to do that? There is this little stock comparison thing in TipRanks. I'm going to try it out. I don't know where these ones came in, but let's see if we can do it. AMD. Who all did you have there? NVIDIA. It's probably going to come down to growth rates without looking. TSM, so love Taiwan Semi. Taiwan Semi is always going to be the lowest because they are a manufacturer. Okay, so they are making a lot of money, but they also are in a different game. I'm just going to fix this real quick. Every time I choose a new website, the websites have like slightly different views. So this is TipRanks stock comparison tool. I haven't used it in a while, but it does give you a nice overview. So price today, you were talking about P ratio. They have AMD's at 39, NVIDIA's at 74, and TSM at 3370. Is that about what you had, Patrick? Yep, that's about what you had. So TSM's the easy one because they're a manufacturer. The difference between NVIDIA and AMD is going to come down to growth rates. So AMD is actually, I like AMD. That's stupid. Dang, I'm fixing it. Thought I was going to fix it. So on the analysis tab for AMD, current year 2021, year ago EPS of $1.29, and they actually have it going up now. They had this flat for a little bit, but now they're calling for a 69-ish, 68 cents-ish gain for next year on EPS. Sales-wise, they're going to add $4 billion. Now let me see if we can stack these guys up next to each other. Now for NVIDIA, which by the way always screws me, and these are in non-GAAP numbers, but from a non-GAAP, we'll assume that the ratio for non-GAAP to GAAP is about the same, the growth ratio, just for kicks. They're adding $3 per share plus $1.50 in 23. You're adding 70 cents-ish for AMD plus 50 some cents. So from an earnings standpoint, NVIDIA's growing a lot more per share. Now compare the revenue numbers. NVIDIA goes from 16 billion, assuming this is all going to happen, right? 16 billion to 22 to 24. So you're adding $8 billion. What was that percentage? 32%. And AMD now is adding 38%, 9 to 13. Okay. So I'm going to tell you right now that AMD's projected numbers from analysts have went up quite a bit, probably in the past 2 weeks. So right now, I think AMD is the better buy if there's a rationale for these projections coming in. AMD was originally, call it 4 months ago, 3 months ago, they were projected as flat for next year, or for this fiscal year. That's not what those numbers are saying right now in Yahoo, which, as you guys know, analysts always update their revenue and EPS projections. So with that in mind, it looks like AMD is a significantly better value on the valuations I looked at today than NVIDIA. Now, you could maybe potentially make the argument on an NVIDIA that the ARM acquisition down the road does something, but I don't see that impacting 2021. So I'm glad you called that out. Those numbers have changed since I looked last. And if we looked at, I didn't call this out, but if you guys noticed, right now on TipRanks, price target upside, little bit more for AMD. Now this is a consensus, so not always as good as picking, certain people that you like. What are we on? AMD. 3 people came out today and put new buy ratings in, 106, 120, and 115. So something must be happening at NVIDIA. Why advanced? AMD Milan server board increases performance. So if you know anything about the AMD Milan server launch, I do not. That could be the news behind this, but very interesting. Now, on the NVIDIA side, let's see what kind of action they've had lately. 8 days ago, you had a new buy come in plus 15%. That's the freshest we have. And so right now, I would say AMD's hotter. Yeah, hotter in terms of recent news than NVIDIA. I don't know what the Milan server is. I'm not smart enough. Go look at it though. Figure out if there's any truth to it. And thanks for the question, Patrick. I thought you raised some good things. Let me get a drink, Hosea. Wanting to start a paper money account. For your resume, what's a good strategy? Oh, geez. If you want it for a resume, I think you're going to have to pick stocks. I don't know what you want the resume to go into, or you could do two sides. It depends on who the audience is, right? But if I was going to do paper to prove that I was a good investor, I would probably choose stocks because it's riskier for you, but it also, assuming you do well, shows more ambition that you're willing to make actual picks. On the same token, if you wanted to be a financial planner where you're just meeting with regular Joes and advising them on retirement strategies, then you could have an argument there for ETFs and index funds. So ultimately, think about who your audience is and what would they like to see, and then replicate that. Also, would like to hear thoughts on DocuSign. I think I did a recent video on DocuSign. I like the company, and I think it has potential. If I remember from my video, the price is just a shade too high, and I would try to get it under $200 and know that you would have to. It's still in a situation where their earnings are going to take a little while to catch up to the price. So this $1.28, if this happens, puts you at a P of 200. Next year, let's assume they get to $2. Now you're still at a P of 200, or excuse me, you're at a P of 100. So it's a good company. These growth rates are killer. If you buy today at 212, it's not that it's bad. It's just you have to wait a little bit longer, potentially, for it to go green. Don't forget, I sit on the side of interest rates going up will bring valuations down. So a DocuSign could have a remarkable year, but if my projections on interest rates and valuations hold true, DocuSign can beat expectations and still see their price lower. That's all I'm saying. Company as a whole looks really good. If you're going to buy it and you believe in it for 5 years, there's probably nothing to worry about. I try to buy stocks that turn green quickly, and so that I'm always up and I'm never in a position of a loss. That strategy has failed me before, though. So Enphase is a good example. For some reason, I went against my principles and I bought that at a higher point in the 200s. And this is why I do what I do normally, because it dipped all the way into 140 land. I still like Enphase. I'm holding on to it. But if I would have done on Enphase what I've done with most things I buy, I wouldn't be in this position. Because I would have waited. And it's not the end of the world because Enphase is a good company, but it kind of makes me mad, right? So that's how I look at DocuSign. Cash percentage for Daniel is, okay, a couple of questions. What is your cash percentage? Right now, it's mixed a little bit, but it's in the neighborhood of 10%. So, I have if there's sort of like money that I would trade in the month of March, period. And then there's like money that is extra in other places if there is like great prices, right? If we're coming up on the year anniversary, maybe today, of the stock market crash. If something like that happened or anything near that, that's not going to happen again. Then I can go pick off other funds that are just, bloated savings accounts basically to put into the market. So, but all in all together, it's in that 10% range. Also, is Amazon overvalued? I don't think so. I think Amazon is stagnant, and every day that Amazon remains stagnant, their EPS is catching up very quickly to their share price. If you can get it on a market dip under 3,000, that's what I've been telling most folks. That's what I'm targeting. I only have 2 shares, and I bought the most recent one under 3,000, 2,996, I think. And I think my cost base is at 3,100, and I'm happy with that. I think it's $3,800 by the end of the year. And then finally, oh, that was it. Thanks. Armand's agree on the question on Amazon stock price. Cool. Just answered it. Will, the market will probably go up. I agree with Will on one thing. Every time we think it's something else. So don't be surprised. Zach says, I think you should take a look. They don't look like, oh, you're talking about the virtual reality glasses. I will take a look. I don't, and the industrial uses, Zach, I think is a good call. So I'll take a look. Industrial use glasses, I was automatically just lumping them into a consumer thing. If it's industrial, then you could definitely have something. The good side of consumer is you have the potential to sell to 300 million people, whereas in industrial, if you're just doing, say, car manufacturers, right? It's a limited amount of employees, and then how many employees actually need to wear these expensive glasses. So you would limit your use case, but you would also likely have a better chance of selling if they made performance at work better. ASO sells guns too. Dick's does not. Gotcha. Guns and ammo are selling out everywhere. That's been like the past year or two, man. It's crazy. Thinking how Rocket did. ASO is one of them. Yep. So JP was just talking about the comparison of ASO as being a shorted stock. Dude, and the same thing is with me and Rocket and Smile Direct. I'm not afraid to buy a heavily shorted stock at all. The catch would be, as you've seen, as I've personally lived through with SDC and Rocket, is like it just limits the huge gains, right? ASO, Rocket, SDC, they can come out with huge numbers, and you think it should go up 10% or something, but it doesn't. It goes up like 2%. And it's just that pressure. But if the company continues to perform, regardless of who the company is, the shorts expire, they go away. Unfortunately, that can take a couple years. I went through that with Turtle Beach, ticker symbol here, which makes video game headsets. Took forever for those goofs to go away. And then I finally got my double up on it, which is great. Just know that you just have to hang on longer. Derek, hold on. Raj says SQ at current price. So I went through a month, February, where I was like, I'm not buying Square unless it's under $200. And that happened. I think it happened once for sure. I'm looking at the chart. And it got pretty close on March 8th to 201. Now you're back up. Be very selective on when you buy Square. I should say this. I'm being very selective on when I buy Square. I have a small position. I see this as a wildly volatile stock that will probably be worth more than this by the end of the year, 244. However, numerous instances of opportunities. Here's your 6-month chart. So we start here in September. 187 down to 155, up to 198, down to 172, right? And it's making progress. It's doing what a stock is supposed to. 241 on December. Okay, so if you bought it right before Christmas, you had all these days before it got back. It got back on Jan 8th. If you missed that day, you had February 5th before. So Square is just one that I think you can literally try to time the market because it goes through shifts of news. 244 I don't consider. Let's see, what's this? March 2nd at 250. I don't know. I'm just like, I want to see a red day for Square. This is minus 2%. I want to see more because there's nothing in Square's fundamental valuation that makes any sense whatsoever over the next 2 or 3 years. Now, I'm in only because I like PayPal, and I decided that it's dumb to like PayPal and not like Square because Cash App, I'm all in on everything Cash App. The company, though, the stock price is debatable. And so my 2 cents, Raj, is be super picky. Derek, are there any companies you love but can't bring yourself to buy? So Square was one. I'm not a Dorsey fan at all. However, I don't know her name, but if you've ever done the earnings call and it's the CFO, it's a female CFO, I believe, or maybe she's CTO or something, just great. She does a great earnings call. And I wish I remembered her name. Other people that I don't really get into too much, can't think off the top of my head. Yeah, I really can't. Dorsey's pretty big. I'm okay on Zuckerberg. He doesn't really bother me too much. I think that he's maturing very quickly. Bezos is another one. He doesn't bother me at all. I don't know. I can't think of someone specifically, but I'm sure that there's people. But it doesn't stand out. There's plenty of stocks that I pass because I just don't like the hoopla around them, and because it always makes me nervous. That in this retail environment has been can be tough, right? Tesla was probably the most notable. When everybody piles in, like, hey man, the price goes up. Like, that's just the way it goes. But I don't buy things that I don't feel comfortable in, generally speaking. End phase at the current price, get picky, just like Square. What are we at? 167. Here's your 1 month. What was this price? This was depressing. 130. So I'm going to say 6 months. 167, not bad. But I think for end phase, see this, where it hits, this is a nice drop. I still think you could get around 150, if not under, if the interest rates, I'm talking about a major market shakeup here. You could see this. This was a good day though, man, 130, and you're already at 167. That's how I can handle end phase and my losses. Is it a quick bounce, just like Square. LMT sounds familiar, can't think of it. Lockheed Martin, I like them. I like Lockheed Martin. I don't own it. I believe it's in my dividend ETF in my IRA. The thing that I read an article about that I thought was super interesting about LMT was their space program. That's super interesting. And this EPS, low PE ratio, unbelievable dividend. I don't know how, if you're anti-guns or anti-military, I guess you probably wouldn't buy this, but from an engineering perspective, I think it looks really good as something that you don't wake up every day and wonder what's going to happen to it. Last year's EPS, 24.58. This year, throw $2 on top. Next year, throw $2 on top. 4-ish% revenue growth. Better than a savings account. It's better than a savings account, I'll say that. All right, what do you think about Skyworks? I think is what that is, WSKS. Skyworks Solutions, great stock. I wish I would have bought this not too terribly long ago. I'm not a big Apple guy, though. I don't use Apple. My family does. I like Apple stock. I love watching Apple stock. But yeah, I'm just going to leave it at the fact that I think Skyworks is a great stock. Way back 2 or 3 years ago, the financial education Jeremy did a big thing on it, and he was just getting into it at the time, and it was super intriguing, and he had a great case for it, and I'm happy for him. I don't know him, and he doesn't know me, but he was very bullish on it, and he had his whole case there 2 or 3 years ago, and here it is. So great stock. ASML. Do not know that one. $551. Chip company, I guess. Advanced semiconductor equipment from the Netherlands. That's why I don't know it, because it is, yep. So I personally wouldn't buy it because it's a foreign stock and it's listed as such here in America. However, you're in semiconductors, you're looking like the business is pretty solid, strong EPS, a little bit of a dividend. If the numbers translate, this PE is pretty high for a semiconductor company, but I don't know, maybe they just invented something and it's supposed to come out, and that's why it's so high. You do add $3 to the EPS column this year, 32% growth this year. So, it's running hot based on the fact that analysts see a plus 30% year. So maybe if this landed at $11, you're in that, 55 PE range. Maybe try to get it on a dip, but to your point, let's look at a smaller version. Yeah, 500 would be nice. It's not going to solve all the overvaluation problems, but I suspect that you can find some time on this one to get closer to 500 if you don't have a position. We'll have to see. All right, guys, I'm stopping there. And hold on, I saw a Google one from Sumitra B. You did a due diligence on Google when the stock is 14. What is your current opinion? Love Google. I need to do a Google update video, and I need to do a Disney. Maybe this week I'll get those. Anything under 2,000 with Google, I think is a great buy. I'm not sure if you'll get it. They're on fire right now, so I will do a new Google video. I love that stock, and it's represented extensively through the ETFs I own in my IRA, so I don't have it as a standalone. Just realized I left that on. I don't have Google as a standalone stock, but it is heavy in my ETF through not only QQQ, but FDN, other ones like that. So, all right, guys, I got to roll. Thanks, everybody, for coming. I really appreciate it. And, we'll catch you on the next one. Have a great day.